All right, tick chart video. So, highly anticipated. I mean, I've been using the tick chart for a while. I had levels marked up. The way I was using it was on the 10 minutes, and then I had levels, 600 levels, but as you can see, it does go further than 600. So, that being said, Michael Silva released or created a attached to the chart tick chart, which is the NASDAQ. It's the one connected to NASDAQ. It can be played on NQ or MNQ. It's the exact same thing. It's connected to the same thing. There's no difference. You can play it on both. That being said, it shows the extreme of both sides. Think of it as a boat. If everybody walks over to the front of the boat, it'll it'll kind of it'll be overwhelming and unbalanced. So that is when usually the price tend to rotate. Now, here's a very, very, very fantastic example. You have the first higher high leading into a consolidation, and you have the first tick. The first tick they tried did lead to some kind of short, though you had to wait, kinda ish. It was still a good opportunity. It was a small opportunity. On the second peak, obviously all the liquidity that was trapped over here, now because they crossed above or was about to, they all started piling in long orders. You could see it in the volume spikes. So everybody went long over here and then they all got trapped, and then that's when the market makers tossed the price to the short side. That being said, the tick happened over here. It did lead to a little bit of drawdown, but at the end of the day, it was the best opportunity of the day if you shorted it back down to swing lows. You could short it here, you could short it here, you could short it here. Any of those higher lows was completely fine for a take profit. Um, it's based on the 1000 reading rather than the 600 readings, which is 10 times more accurate than the 600, because ever so often it does go a little further. And to me, I was entering whenever the candle was like the body of the candle was starting to close inward towards the neutral level. Now, your best bet is to play it as if once it happened, you do roughly 10 points, and then you send it to the 0 level, which happened over here. So that would have been 100 points. Maybe not. It happened over here. So it would have been a little less than that. So roughly 73 points. Still 73 points. The risk reward is 3.6. So that was one fantastic trade, right? I mean, 73 points, pretty decent. You could have taken this one, obviously. I mean, you're either targeting this, or you get stopped out at BE. Either way, uh, you can use it for confluence. You can use it for market structure. You can use it with any of your system. Any system listed in the indicator and system channel, you can use it. Now, the first one in the morning, forget about that one. The tick chart will either open on the neutral, it'll open at the extreme highs or the extreme low. Forget about it. Because clearly here, it did retrace, fetch liquidity, but at the same time, it's on the exact same candle. So even if you caught the top, you really caught, like, you could have catch it, but it's more risky. So I suggest just forget about it and then wait for the next ones. This one was beautiful. It was right at the top, and then you caught probably a good 20 to 30 points. And then on this one, same thing, you caught 20 to 30 points, almost 50 points. So now you're up 100 points on the day. On this one, you might have gotten stopped out or BE, or you would have caught 10 points, 10 to 20 points, which is not bad. But at the same time, you can see it goes from the extreme back to neutral. Once it's at neutral, get out. That's your exit. You set a stop loss of 10 points, but you don't set a TP. Your TP is the zero level once it goes back to zero. Same thing here. I mean, granted, this one did retrace, but you would have really have to catch the bottom and then close it as soon as it did, because it did hit the zero level on the exact same candle. On this one here, you would have exited over here at the highs of that candle for another 20 points, 20 to 50 points. And then same thing here, you were at the extreme low. So it is a lower low. So off the market structure right off the bat, you're like, okay, well, that's a lower low. If I enter on this candle here, I can ride it. And then you could have exited right here at this one, but you could have also let it happen. You did have a bullish Maribozu, so that gave you another sentiment that the price action was bullish, and you could have rode it back to for another trend back to the highs. Or at least exit here back to your original swing high, or ride it to the upper daily expected move, because it started closing above the 20T, and then your stop loss would have been here after uh, your first trailing stop would have been here, your second trailing stop would have been here, and then third, fourth, and you would have gotten stopped out on that one. Or it would have hit TP. I think it might have went up first, then lower, but yeah, you get the point. Uh, for this one here, that was another great one. The only problem with this one is it started showing up over here. So now that one was at 1223. Yeah, so this one really gave you a pretty significant above 1000. Not just this one single touch, but it continued. So now, if you did catch it, you would have exited over here, and then three more showed up. Now, if you caught that one, you were stopped out. If you caught that one, you could have been fine, but it would have been really tight. This one was really, the last one was the best. So just wait till the candle close, so that the next one is your confirmation that it is going to be a downtrend. And on the third one, obviously, it just gave you a fantastic. I mean, that was 70 points right off the bat. Use 20T. You could have either exited here, or you could have used 20T. Could have used daily. Could have used. I'm 50T. We're getting trailed out, but still, it's worth. Could have used the MSB. There's plenty of indicators, plenty of levels that you can use on the chart for your take profit. Or if you want to keep it simple, just use the zero level. As soon as it crossed through, just exit, take your 20, 30 points, get out. You get roughly 0 to 7, 8 opportunities a day. You do that every week, you catch 20 points times up to 8. That's 200 points a day at the most. That's pretty fantastic. Like, that's a lot. And especially when you risk 10 points. Like, if you risk 10 points per trade, that's pretty neat. This one here is the same deal as this one. So you kind of expected this. You expected this one to look like this one. Obviously, you get the first one, candle close, in the red, candle close, in the red, candle close. Starts retracing. You're like, oh shit, am I gonna miss this move? Do I want to get caught in another one? You're like, yeah, just wait, and then boom, right? You get your entry. On the fourth one, you get your entry. You're like, okay, I'm short now. You get it short, it goes right here, boom, you get your TP, you're out. Now, if you're not out, they retrace. It said BE, never comes back. Now you're still in the trade. You're still in the trade. Now you get a better trade, and then goes to 50T. You exit, and it gives you another one. So you could have reversed right here, reverse it out, and then target another swing high. Target this one. Oh, it's not 0 yet, so I'm gonna wait for the next one. It's not 0 yet. Well, it is 0, but it's, yeah, you could have probably exited here, meant to be safe. He's still caught, right? 20 points, 25 points. That's not bad. But if you really wanted, you could have swing high over here, and then you would have TP'd over here for that one. Beautiful opportunities, right? I mean, it's clean. It's clean. It's easy. It's 10 points. Some of them are really to the tick. Like you're catching bottom. It's fantastic for 10-point risk to catch 25 to 30. That's a 1 to 3. That's going to be a 3 RR mostly every time. So that's something to consider. This was Monday, and Mondays are pretty nice. I mean, last Tuesday we had 0 opportunities. I think it was Tuesday or Wednesday. We had 0 opportunities. At the end of the day, I mean, you're just sitting through the entire price action. It forces you to watch the market, which is fantastic because at the end of the day, you get an idea of market structure. You get an idea of what's happening in the exchange. It gives you a bird's eye view, and all you have to do is sit. You sit on your hands and you wait for the fucking signal, and you look at the market. Is this signal good? Is it worth taking? Yes or no. Simple. It's 2 simple decisions. On Friday, we kept having, Friday was one hard day because the news of war really fucked a lot because we did touch the 200T, we tapped it from under, and we never broke up. So the price was bearish to begin with, and then obviously you get a retracement here, you catch a small amount, and then on this one is a massive spike, retrace back, catch a small amount, massive spike. So it started early, you catch a bit, and then it comes right back down, and it kept coming back down for these little tiny moves of like 7 to 10 points. So that was a hard day, but the amount of opportunity led to a significant amount of points that you could have taken for the risk of 10 points. It's a very good indicator. It's a very good strategy. It's something that I wanted everybody to kind of use because I've been using the tick chart for almost all year now. And I like that it would tell me the sentiment of buyers and sellers. And I do believe this is the easiest strategy that I have ever seen. It's stress free. You just follow a signal and you take the trade. It's easier than waiting for a retracement, consolidation. Okay, we have a lower low. Wait a minute, it goes into a higher low. It goes into a lower high and then it comes back down to a lower low. Now we can see a higher high. And it you still have to think with the strategies that I use to this day. I still have to think and analyze the market. With this, you get an alert on your phone, you look at it, okay, there's a signal. Let me wait for the candle close, 10 seconds, 10 seconds done, let's enter. Boom. Okay, I'm going to take my 10, 15, 20, 25 points, get out, go back to whatever the fuck you were doing. It's very simple. Uh, I don't want to automate it because I want people to watch the market. The more you watch this price action, the more you understand the exchange, the more you make a bias, the more you trust your ability to read the market, and then you become better at trading. That's the whole point. That's why it's imperative for you to just sit there and wait for the signal, wait for the market to tell you that, okay, everybody's on one side. It's about to reverse. Everybody's about to take profit or enter their order. And then you just catch the trend. Uh, it's that simple. There's nothing else to it. If you have any questions, always just DM me and I will steer you in the right direction. But as far as right now, that's it. That's as simple as that.